Hey there, everyone. Welcome to Chart This with Dave Keller. I'm your host, Dave Keller, coming to you from a kind of beautifully overcast and cool Redmond, Washington, here on Tuesday, October 29th, 2024. Thanks so much joining me from anywhere that you're at, on whatever platform you're at. We're currently live streaming to Facebook, LinkedIn, YouTube, and X. I appreciate you so much tuning in from wherever you are at. As a reminder, I can see your comments at the end of the show. I always try to take time to take a question or two from the comments section. So whatever platform you're watching on, just drop a question in the comments section. I'll do my best to get to it. Any of the questions that I don't get to, we'll get in the Chart This mailbag. We're planning an all mailbag edition on Friday of this week, and we'd love to answer one of your questions on the air. It's been a lot of fun, actually. Those mailbag episodes are great because it gives me a chance to sort of take a step back, and it's great to answer things sort of real time as they come up, but actually, being a little more intentional and selecting some great questions with topics that I think are good to dig into are a lot of fun. So the more questions you put in, the better opportunities we have to cover some great content. So thanks so much in advance for that. Kind of an interesting day, right? We had a bit of a sell-off going into the close, but overall, the market remaining fairly strong here. We've got a lot of earnings to digest after the close here. We've got Alphabet reporting. It's sort of the big headline number after the close. Some consumer data earlier in the day showing some, I guess, renewed strength for risk assets. But if you look in a moment as to what was leading today, technology had a pretty good day. Communication services had a pretty good day. But almost all of the sectors, as a matter of fact, all 9 of the remaining 11 S&P sectors were actually in the red today. So it's one of those where it's not as strong of a broad advance as you might expect just by looking at the headline. S&P slightly higher, the NASDAQ up higher. The average stock actually got dinged a little bit to a lot today. A lot of charts to get into. Let's get into some of the charts here together as we continue with our market recap. So looking at the overall conditions today, I mentioned sort of that brief sell-off just in the last half hour of trading, but overall, decent update for risk assets. The S&P actually opened a little bit lower and closed higher. The S&P finished today around 5833. That's up 0.2% from yesterday's close. The NASDAQ composite was up to 18,713, and that's up 0.8% from yesterday. But note at the very top of the market overview here, the Dow is actually down about 1/3%. Mid caps, small caps kind of mixed. The S&P 600 small cap index, the worst performer on the front page, down about 0.4%. The VIX remaining below zero. So as stocks generally, in terms of the averages, moved higher, the VIX actually moved slightly lower, about 1/3 of a VIX point to just around 19.5. VIX below 20 for me, low volatility environment, not much to be worried about. VIX above 20, at the very least, you need to be prepared for further volatility and further potential downside risk. Looking at the interest rate environment, honestly, a pretty sleepy Tuesday session, to be honest with you. Rates were a little bit higher earlier in the day as bonds opened a bit lower, but by the end of the day, kind of right back at Monday's close. So the 10-year yield holding steady around 4.28, 5-year point around 4.1%, and the long bond yield just slightly above 4.5%. The dollar index, honestly, not much change from yesterday's close. Commodities a bit mixed as well, although note gold and silver firmly in the bullish camp. Gold up another 1%, silver up over 2%. Crude oil, which had a rough day yesterday, continuing to press the downside, down another 1%. That's using the US. So the strength in the precious metals trade has been pretty remarkable here in 2024. Gold year to date has outperformed the S&P and the NASDAQ and most other things besides some high flying stocks that have had crazy returns this year. Gold's been one of the better places to be. Got a couple episodes of my podcast recently with Peter Schiff, with Mark Skousen, talking particularly about hard assets versus soft assets, gold and silver versus dollars versus equities versus commodities. Make sure that you tune into those episodes of the Market Misbehavior podcast. I'm actually just finishing up episode with Mike Turner, all about trend following. I hope to have that out by the end of the day today, and I hope you can enjoy that one next. One more coming with Adrian Day of Adrian Day Asset Management. So really thoughtful economist with some great comments about non-U.S. markets I thought would be great to share with you. Boy, cryptocurrencies very much with a bullish day here. Bitcoin up another 3.5%. we're getting dangerously close to Bitcoin starting to push new all-time highs. We've talked for a while about Bitcoin being in this broad basing pattern. We've talked about the upside potential if and when Bitcoin can emerge from that basing pattern that's been in place for the last 6 to 8 months. Arguably this week it's happening, or at least today, over the last 24 hours, you're seeing sort of a renewed upswing. Big update today, potentially completing that rotation. It's not quite there yet. We'll look at the chart in a little bit, but overall, I think a lot to like on the chart of cryptocurrencies, particularly Bitcoin. All right, this is what I was mentioning in the introduction. Tech and communication services, decent day, right? The XLK was up 1 1/3%. Communication services up about 1%. Starting pretty good. It feels like a pretty good day, but from that on down the leaderboard, it's all red. Industrial slightly below the zero level, and then it gets all the way down to energy and utilities, having a pretty rough day. Utes were down the most, down over 2%. Energy down 1.5%. REITs and consumer staples both down about 1% for the day. So this is one of those things where the construction of our indexes creates and the top heavy nature of our indexes, meaning the biggest stocks have a huge outsized weighting. Unfortunately, that causes a day like today where, depending on what you look at, it was either a really good day or a really underwhelming day, right? Depending on what particular measurement that you're using. Equal weighted measurements of equity strength did not do particularly good today. The advanced decline data, and this is a new and evolving widget I found on the stock charts platform. They added this one, tracking advancers and decliners. They changed the coloring, and I like the bold new look here. But you can see that essentially decliners far outweighed advancers. Right, on the S&P 500, 68% down versus 31% up. So while the index moved higher in terms of the S&P and the Nasdaq, the breadth was much more negative. And this is a very real issue, I would argue, here in late October of 2024. Is the market moving higher on weaker volume, on weaker momentum, on weaker breadth? That is what major market tops usually look like. Now, what you look for, certainly what I look for when you start to see these leading indicators start to be checked off, market moving higher with less new highs, on less stocks going up, on lower volume, on less accumulation signs, on weaker breadth, it tells me to start looking for signs of distribution. Look for confirmation that it's not just concerning patterns leading into a top, but actually very real distribution, very real selling, signs that the charts are actually rotating lower. I would argue, overall, we're not seeing a lot of that just yet, but that's what I would be wary for as we wrap the month of October this week and as a Friday kick off the month of November. Looking at the Magnificent Seven and Friends, sort of the mega cap leadership names here in the growth space. And again, growth over value was the story today. Meta up almost 3% today. Still kind of, struggling to reemerge after consolidating. It's still sort of range bound over the last couple of weeks, but a day like today certainly helping the story. Alphabet, again, reporting after the close here, just as we were going live. We were getting the latest numbers up almost 2% today going into the close. Netflix and Amazon both up about 1 1/3%. On the downside, Tesla, the only one of this group actually closing lower. Boy, talk about an underwhelming week after their earnings release. You had the robo-taxi event, the gap lower, earnings, the gap higher, but then completely stalled out at resistance. I was speaking to the students at Texas A&M University. Shout out to the Aggies in College Station. And one of the things we talked about was support and resistance levels, right? Looking at the current price, looking to the left, assessing the overall conditions, thinking about where we're at relative to where we've been and what sort of breakouts or breakdowns would tell us that something's different. I would say the fact that Tesla, even with all the optimism, the little island reversal, has not broken above a clear resistance level tells me everything I need to know about why I'm not particularly keen on Tesla until and unless it can break above its previous resistance level. Let's look at the heat map, what we call the market carpet on stockcharts.com. 3 ways that we use this visualization. Number 1, the high level takeaways. What's your initial reaction looking at the general complexion of the heat map? Number 2, the big dogs. Look at the biggest names that have the biggest weights in whatever benchmark. And then number 3, look for opportunistic ideas, things that are contrarian moves, things that are down when the market's up when the market's down, or doing something unusual relative to other similar stocks in similar sectors. My initial assessment, look at the difference between the upper left kind of quadrant and the bottom right quadrant on this visualization, right? The upper left, you have the big mega cap names. This is just today's trading. Broadcom up over 4%. AMD up about 4%. That's another earnings name this week. Alphabet, Meta, Amazon, all doing pretty well. Apple and Nvidia up slightly, but those were, sort of the weaker out of the large cap names. So, that upper left quadrant, which are all the growth sectors, right? The FANG sectors doing very, very well. The bottom right, look at the bottom right corner, cover up the upper left, and just look at the bottom right. Completely different day, right? Energy, staples, REITs, utilities, industrials, materials, all overwhelmingly down versus up. And so today was very much a feast or famine kind of day return wise. It was either a growth stock probably doing okay, or it was a value stock or a defensive stock probably struggling a bit. And again, that's what the sector distribution tells us. That's what the heat map confirms as well. Number two, focusing on some of the larger names and what to observe there. Again, I mentioned Broadcom up pretty big. Meta, Alphabet, of course, laser focused there today. Again, along with a lot of other stocks. We're not even able to cover, we'll scratch the surface of names reporting earnings today. There's quite a few, but note that particular one. And again, the lack of follow through, I would say, with something like Apple, right, is something that's noteworthy for this sort of market to be strong into November and December. If you think there's just no major pullback in Q4 and it's just lights out bullish environment, that could happen. Whether or not you think that's likely, it's certainly possible. I would say that only happens if Apple re-engages the uptrend. If Meta doesn't just have one good day, but is able to power above resistance. Those are the things that I would need to see. And again, still waiting on charts like Apple to really break out and complete that rotation above kind of that 235 level on the upside. Finally, let's look for some opportunistic individual charts to pay attention to. I'll highlight PayPal, which is down about 4% today. That's an earnings name. Visa and PayPal, both reporting earnings today. We'll look at the chart of PayPal, with an opportunity to sort of continue this uptrend, actually pulling back a bit. The long-term trend's still fine, right? We're still making higher highs and higher lows, but today certainly felt like distribution around earnings. I'm looking at renewable energy here, First Solar, Solar Edge, some of the bright Enphase Energy, some of the brighter reds that you see in the technology sector. Now, most of these have not been particularly strong charts for a while. A lot of them have failed to hold support levels, but again, today sort of continuing to push to the downside. In consumer discretionary, I have to note Royal Caribbean. This is an earnings name today as well. RCL making a new 52-week high today, up about 3.33%. So cruise lines really have started to emerge. I mean, Royal Caribbean breaking above resistance and then just continuing that run. And today continuing to push that to the upside. Also noting there was one other, in industrials, I would say industrials are sort of like a mixed sector, right? I mean, you have some things that are up, like waste management up over 5% today. I think that was an earnings name today. Delta and Southwest, some of the airlines making some nice breaks to the upside. Delta is making a new 52-week high today. So some of those industrial stocks actually doing quite well. On the other hand, you have Raytheon down about 2%. NOC, LMTs, some of the aerospace defense names actually getting dinged today as well. Howmet, HWM, down about 2.25%, right around $100, which is one of those big round number support levels that I always like to pay attention to. As a reminder, I can see questions that you put in on whatever platform you're seeing this on if you're watching the live stream. So just put a comment below on whatever platform you're on. Later in the show, I'll try to grab a question or two before we wrap the live stream. If you're watching this as a replay on our YouTube channel, thanks for joining me there. Just put a comment below there, and maybe we'll get it into the Final Bar mailbag for our Friday episode. All right, looking at the chart list here, let's go to a chart review. Let's start with the S&P 500. And, again, I think this trend line connecting the major lows over the last 3 months still very much holding. Today's low, the low, 4 days ago? That's Monday, Friday, Thursday, Wednesday of last week. That was the lower move. That was the low for last week. All kind of lining up. And again, what I love about this sort of technique is you draw it based on the first 2 points, and then you look to see if it lines up independently with additional points. And every time this line is tested and reinforced, it sort of further validates that this is a great visual representation of the pace of the trend. And I have no problem just kind of being super lazy about the portfolio approach here and just waiting, assuming that this trend is going to continue until the chart tells me otherwise. And again, lazy is probably the wrong word. I mean, it's more evidence-based. It's more not forcing it. It's not forcing a trade. It's not trying to anticipate too much. It's just being, recognizing that the market has a certain look and feel. It's in a certain trajectory. At some point, that's going to change. It is going to change at some point. It's not changing today, right? Because we continue to test and reinforce this trend line. So keep an eye on trend line support. Keep an eye on the line in the sand. Again, I think there's plenty of room between current levels and 5650. That's about 180 points below today's close. We have all of that room to chop around and be noisy, but still be within a primary uptrend, holding moving average support, breakout levels, traditional support levels, and all of that. We break that. I think this is a concerning rotation. And while I can see some leading indicators, the divergences I mentioned, suggesting we might be close to a major top, the trend following part of my toolkit is still, we're going up. And so I want to assume that upward trend is in place until proven otherwise. Looking at the Bitcoin, you can see one of the best days we've experienced here in quite some time here for Bitcoin. Currently trading around 72,550. We did get up to around 74,000 earlier in the day today, and that is literally ticking. That's a new all-time high, I think, or it's certainly getting above the March peak there on an intraday basis. So when you have a big basing pattern like this, it's not just enough to trade to resistance. We need to trade through resistance, right? We need to show that there's additional accumulation above that previous ceiling. And I would say that is where I'm watching right now. Sort of been eyeing that 72 to 74,000 range. That's the highs from this summer. That's the highs from this spring. We're right there, which means this week, if and when we can get above there, I think that's a lights out bullish breakout, a big base breakout that has the opportunity to lead to much further highs. If you're looking at this chart in the bottom right corner and saying, Dave, hold on, it's the RSI is overbought. Isn't that a bad thing? Isn't overbought a bad thing? The answer is it absolutely is not. RSI being overbought on the surface simply tells you we've gone up a lot, right? As I would say, overbought means up a lot. That tells you the price is doing what you want. Look back to October into November of last year, this basing pattern for about 6 or 7 months. We broke out, the RSI became overbought. That was the beginning of a huge run from around 31,000 up to 74,000. Look back here on the left side of January of 2023 when we broke out above resistance at the end of 2022 and became overbought. That was the beginning of the run from around 20,000 up to around 28 to 30,000. So those overbought signals right as we break out are often the beginning of a protracted incline. It's not the end of the move, right? What you look for at the end of the move is the market moving higher on weaker momentum, right? When you see when it no longer becomes overbought, that's when you have to be concerned about, the sustainability of this uptrend. The positive momentum is no longer there. It's drying up a little bit. I would say this is actually looking a lot more similar to previous basing patterns. And that initial breakout is how you get to much further levels. Certainly in the history of Bitcoin, that's what we've seen. So very close, I would say Bitcoin signaling a pretty decent upward follow through after a basing pattern for many months. Gold making another new high today. Again, I do own gold. I own the GLD in my accounts, and the reason is because the price is going up. You asked me why I own gold. The reason is because the trend is positive, and I think it's a good place to be. That's twofold. Number one, the trend is positive. Number two, it tends to have a low correlation to stocks, and so if you're concerned about the sustainability of a move in equities that have been going up for a while, you go to things that have tended to have a low or inconsistent relationship to stocks, which means if stocks do sell off, I would not necessarily assume that gold would sell off. That's what we would assume if there's a very strong positive correlation, right? If one of them goes down, the other one's probably going to go down as well. You can't make that assumption with gold because over years and over multiple cycles, gold and stocks are actually very loosely related. The relationship is actually quite fluid. So a sell-off in stocks would not infer, in my opinion, any sort of similar or even an inverse move in gold. It's sort of moved independent to one another. The trend of gold remains positive. I'm noticing a number of breakouts, and what hit me as I was looking at the chart of gold here earlier today was just the consistency of the positive momentum. We've talked on the show a number of times how when a chart is in a primary uptrend, right? When the trend is overall positive, when we're making higher highs and higher lows, the entire range of the RSI starts to drift higher. And you saw that from like summer of 23 to fall of 23, and then really through the entirety of 2024, the RSI has been up in the upper end, right? It rarely gets below 40 on pullbacks, often gets to the overbought region on rallies. That is the definition of a chart in a positive momentum structure and a positive trend. I don't see that changing today as gold continues to go higher. That's why I own it. And I'm happy continuing to own things that go up until they don't go up anymore. Looking at offense over defense. This is a classic comparison looking at things you want or offense versus things you need or defense. The argument being things you want, you only ever buy discretionary purchases, travel, tourism, new houses, that's not true, new cars, new, luxury goods, new watches, if you've got money to spend and if you're doing well enough that you can do it, right? So when conditions are good, consumer discretionary stocks tend to be a pretty decent bet. When things are bad, we don't have that money or that desire to buy fun luxury things, but we still need to buy staples, right? Household goods, cleaning products, food, beverages, all of that we're gonna buy no matter what. And so consumer staples are more of a good defensive play when the economy or when the markets are struggling, because consumers are still going to buy those goods. The fact that the equal weighted version of this ratio of things you want versus things you need made a new 52-week high in this week tells you that there's quite a bit of strength. The top series is doing that same comparison, but it's a cap weighted version. The problem with that is Amazon, Tesla, Home Depot are huge overweights. There's just a discrepancy in terms of the largest stocks versus the rest of them. So I tend to favor the equal weighted version, which actually is making a new high. And so overall, as long as that continues to go upwards, it tells you that offense is outpacing defense and investors are more bullishly positioned. You're also seeing that ratio, I would argue, reflected in measures of growth versus value, kind of a similar play, right? Consumer discretionary, more of a growth sector, consumer staples, more of a defensive sector, but if you a value sector, but if you more broaden that and look at growth stocks as a cohort and value stocks as a cohort, growth is outperforming value, and that ratio is actually breaking out in the last week or so. The bottom series, by the way, is using two ETFs that track what's called the pure growth and pure value. So you have like a value bucket and a growth bucket, and there are these things in the middle, like a Microsoft that has the characteristics of a growth stock and a value stock. So it's actually in both indexes. The pure value and pure growth kind of look separately, just the ones that are independent and only are in one bucket. So it's a better, I guess, arguably a pure read of those, and it avoids that double counting. That one is also very close to making a new 52-week high again this week. So growth over value reemerging as a theme here, September now into October in a pretty big way. All right, I'll get to a couple questions here in a minute, but I do want to go rapid fire through some of the stocks. Again, this is that time of the quarter where there's so many companies reporting earnings. I can't get through all of them. I'll get through some of the ones that I think have kind of important patterns or breaks or movements that I think you want to be aware of. As always, you want to do your due diligence on these names. Recognize that they are currently reporting earnings. That can create some sudden movements from one day to the next, revaluations as investors digest the new data and commentary in the earnings call. But these are the technical setups as I see it after the close of trading today. AMD, obviously a big one to watch reporting earnings today. AMD in the semiconductor space, one of the biggest names with NVIDIA and a bunch of other companies we're all kind of familiar with as AI plays and part of this larger theme. Now, AMD had been in a primary downtrend, arguably from March into the low in August. And then in September and now into October, we've made a pattern of higher lows. We've made some higher highs as well. As long as we remain above that trend line off of the lows, I think this is a pretty good upward trend. The danger is this is kind of a bear flag pattern, but that only is confirmed if and when we break below that purple trend line, the support line tracking the lows. And as long as we hold that, this is more of a constructive pattern telling you the trend is positive. We've now broken above a trend line using the March and July peaks. And so that, I think, completes that rotation. Today, closing up about 4% back above the 200-day moving average. We've failed to hold the 200-day moving average a number of times going back to the end of July. Is this time different, right? To sort of get additional buyers coming in. I'd love to see us clear that early October peak around 172 to complete that bullish rotation. But overall, I think setting up for success here. Alphabet looking pretty good here. Let's check at Alphabet actually after the close. And again, if you're watching this on delay, you might have better data than I do at the moment. But here around 4:30 Eastern, I'll look at the aftermarket trading. Yeah, up about 3.33% to around 175 and change as of the time we're doing this. So up about here. So, today during the trading session, we closed up about 1.8%. That gave us finally a close above this resistance level. This is arguably a head and shoulders, an inverted head and shoulders bottom. It's not a perfect one, but close enough for me. And that neckline connecting the August and September peaks was finally broken today. The question is, do you get a follow through above there? It looks like, at least in the after hours trading after the initial assessment of their results, it's trading even higher. So maybe expect a higher open tomorrow. Looks like we could validate that as an inverted head and shoulders bottoming pattern. And if so, that actually means the height of the pattern projected from the breakout. That means an upside target back to the July peak around 190. So overall, that could be a constructive development, and obviously one of the largest names traded here in the U.S. Royal Caribbean, other cruise lines having another decent day. It's been a pretty incredible run in 2024. I think the story on Royal Caribbean and some of the other cruise lines is the impressive relative strength, right? Looking at how this stock and this group has outperformed the major benchmarks in 2024. I think that's the story. The trend characteristics are strong. The upward trend, the positive momentum is all good. But the fact that you're outperforming by owning a name like Royal Caribbean tells me a lot. It's up at about 3.33%. Here today on Tuesday. Cadence gapping higher. This is one of those where it's a nice earnings related gap higher, but it's not enough of a gap higher to tell me that it's really a good time yet from a technical perspective. And I'll tell you why. Look back at the last couple months and you can see that this has been really range bound, right? You on the upper side, you have around 290. That's the 200-day moving average, and also the major highs in August, September, October. On the downside, around 240, 245. That's the low from August, September, and October. We're range bound. So even with the gap higher today, we gapped right up into resistance. So I want things that actually trade out of this range. I want something that gets above 290 to clear this level of resistance, to clear the 200-day. That's when I get excited about a cadence. So up 12.5%, that's all great. Can we get above there tomorrow? Can we follow through and show that buyers are willing to pay more than they've been willing to pay over the last 3 months? That's when I get excited about a potential retest of the previous highs around 330. For now, I would argue it's still sort of wait and see mode. PayPal and Visa, two of the sort of payment processors reporting earnings today. PayPal, interestingly enough, gapped lower and opened around 78. It did close back above $80 a share. That's still below a trend line using the major lows in July, August, and September. So I would say big question mark going into tomorrow is, can we get back above trend line resistance? Now, this is a stock that just made a new swing high yesterday, but today on earnings gapped lower. It did show signs of accumulation through the course of the day. So we ended up closing down about 4%, but we closed much above about $2 above the open. So I like that as a potential springboard to get back above trendline resistance. But this is a stock that's had a bearish divergence. There's been a lot of signs of negativity going into this earnings release, gapping lower, but again, showing some buyers coming in. When you have a gap like this, it's interesting to see what happens through the close. What happens the next day? Do you see some sort of change of character as people digest what they learned? Visa was slightly lower today. Again, another earnings name today. I think with Visa, it's all about clearing 290. That's the level of resistance from March, from September, and October. Until it gets above there, I'm happy being patient and waiting. We're still above trendline support here going into to the release today. We'll see tomorrow where we open relative to that range. But again, 290 is where I have an alert set, and that's where I'm watching it. Two more very quickly, and then I'll take a question or two. EXR is a name you may or may not be familiar with. Depending on where you live around the U.S., you'll see their storage containers and storage facilities. It's sort of a chain of on-site storage. This is a stock that's actually been trending lower over the last 6 weeks, made a new high around 185 in mid-September. From there, it's been trending lower. The momentum overall has been weaker. The relative strength has been underwhelming. So a chart like this, I think it really comes down to a sign of accumulation, right? Sign of a rotation higher. This is when I like to use an indicator like a MACD or PPO to sort of, if you want a more systematic way of defining when that trend goes higher. For now, I would say the short-term sentiment more negative. Finish on a high note. Zoom Video Communications, ZM, actually making a new swing high today, breaking above 72 over the last week. That clears the August peak, but today actually finally getting above the December 23 peak around 74. We're sort of right at the peak from September. So we're sort of right at that range, but I like this setup, this short-term breakout and the move higher. And so overall, I would say this is a stock actually had the alert set for quite some time after that August peak, waiting for a break higher. And then actually, I think this alert that just triggered today was going back to December peak, waiting for that break above there. We finally cleared it. That's what I love about, platforms like Stock Charts, and a lot of others have it, Bloomberg and others that I've used, using alerts thoughtfully, right? When you have a key level, a key pattern, set an alert, and then you don't have to worry about watching Zoom every minute. Just wait for that alert to be triggered. If you have a meaningful level, a meaningful threshold where this becomes a good idea or a bad idea, set an alert and then go do something else and let the platform do some of the work for you. I would say Zoom potentially starting to pop above there. All right, let's see. Do you think, Titus Ryder, thanks for watching on YouTube, do you think today's action was the result of a big short squeeze? I mean, maybe. I mean, and again, that's one of those things that I feel like in the heat of the moment ends up being more anecdotal than anything. There are ways with individual stocks that you can kind of tell, yes, this is a short squeeze. And it's one thing I miss working at a big institution with a trading desk that talked to all the other trading desks, was you could probably get a lot more color as to like who was buying and selling and what sort of moves they were making. And you'd get like another level of granularity. I mean, but to be honest with you, I would argue that it's probably still, a period of accumulation. And while there's certainly some short activity, I'm sure people selling into strength. And that is the way that an incline like this can persist. When you have minimal drawdowns and then you see breakouts again, anyone that's short all of a sudden is underwater here. I don't know if I could necessarily attribute today's action to that. Certainly could be a part of it, but for the broader market, I would say, I don't tend to think of it as in terms of, is it a short squeeze? What does it mean? I would say the trend is positive for whatever reason. And again, tracking that uptrend and just waiting for signs that the uptrend is no longer in play is what's most important to me. And that's where I'm not necessarily seeing that, right? You're not really seeing the breakdowns in the major averages that would tell you it's over. I'm seeing signs of further accumulation. And short squeezes are basically a different version of accumulation. It's just short sellers forced to liquidate, which is basically buying, right? That's additional buying that causes uptrends to be had. Yeah, thanks for the follow-up with the put call ratio. That actually is one thing that I didn't show that I'm happy to do it. Thanks for mentioning that. Here we go. That's not the one that I want. I want sentiment. And we'll look at the put call ratios. We did talk about this recently, but I haven't come back to it in a little while. So here's the total put call ratio. Yeah, it's sort of high, right? So if you look, the put call ratio is really kind of relatively low at some of these peaks. Popped higher, and the highest reading we've had here was in August. And this is again the total put call ratio. The pink line is a 5-day moving average of the raw data. The raw put call ratio is actually quite noisy. Today, you see the put call ratios popping higher a little bit, but not quite up there yet. Equity put call ratio kind of neutral still. So I don't know if I would necessarily say that as well. All right, let's see. Maybe one other question. Oh, this is a good one. Bevan, I believe to pronounce it. Hi, Dave. When there's a stock you're interested in, but it has overhead levels of resistance on the way back up at reasonably consistent levels. What are your thoughts on how you would approach that? Yeah, and we saw that with some of the charts that I was showing you here toward the end, right? When something rallies up to a key resistance level, for me, that's like wait and see. I think Cadence is probably a good example of that. Do you buy a Cadence because it's up 12.5%? I get the argument if you're more of a swing trader and you're buying down in this weakness, and then this just feels like this great validation that you were right and it's moving higher. But as a trend follower, I'm happy waiting for the chart to tell me that something's different. That's what would prevent me owning, buying additional Cadence if I didn't own it. And I don't own Cadence. I haven't owned this in a long time. If I'm here, this is what would prevent me from like taking a position right here, is because we've not eclipsed the previous high. And that means something, right? If you think about some of these protracted inclines, right? These long periods of accumulation, it starts with a breakout, right? It starts with that initial breakout where some brave buyers are willing to pay a little bit more. And then that a lot of times creates a positive feedback loop as the higher prices brings in more capital and more interest. And that kind of propels things further and further. That's why I'm happy being patient and waiting for a breakout. And that's what prevents me from taking a position on a chart like this. So I'm encouraged by the fact that we're bouncing off of the lows. I'm hesitant by the fact that we've not had that follow through above current levels. So this is the type of chart I would put in a watch list. And it's also the type of chart I would determine what's my line in the sand, what's my level at which I think this has now proven itself that there's an increase in buying power to the degree that I think as a trend follower, I want to take a meaningful position. And that's where I would set an alert and then wait for the chart to tell me that it's time to get into to accumulation mode. On a chart like CDNS, I would argue it's not there yet. Folks, that's it for the show today. I want to thank you so much for tuning in, live streaming, wherever you're at on whatever platform, or if you're watching this on delay or on the replay on our YouTube channel, I appreciate you as well. Thanks for all your thoughtful comments, your feedback. I can't tell you how much I appreciate the encouragement and just specific ideas about how I can improve the show and make it more of interest. Please keep your questions coming. A lot of the content that I'm able to produce comes from questions from people like you, just running into something, asking me questions that helps me to think about what sort of content to focus on, what examples to use. So I appreciate every question that you put in wherever you're at. For Market Misbehavior, I'm Dave Keller. Remember, it's always a good time to own good charts. Have a great night.